Today we explore whether central banks are set to ramp up their gold purchases in 2021. So let's dive on in. Now, this channel provides global macro insights and champions the importance of sound money in a world gone crazy. So please do consider subscribing. With so much focus on Bitcoin's recent price gains, little has been said of the yellow metal. But crucially, gold remains the key strategic asset held by treasuries and central banks the world over. However, governments and central banks are never keen to raise the profile of gold, and so a disparaging approach is always set towards the yellow metal as economic elites and academic economists run the central banks. And those who control the money supply can determine the destiny of economies through determining credit creation levels. Yet gold, as far as the people are concerned, is a more superior form of money as it offers a store of value over time. And so it is a direct threat to our monetary elite's debt-based Ponzi scheme. But this doesn't stop central banks globally from accumulating more gold despite their disparaging attitude towards the metal. And so what does 2021 have in store for central bank gold purchases? Well, across 2020, we saw central bank purchases respond negatively to gold's best yearly gains in a decade. In fact, we saw central bank purchases fall across the year by 40% from the preceding highs of 2019. Indeed, central banks went on a gold buying spree prior to the pandemic hitting in 2020, and there were also some very interesting gold flows which took place as we considered in this video. And so a record 667 net tons of gold were added to central bank reserves in 2019, in addition to the 656 tons in 2018. And so net gold purchases amounted for just 375 tons in 2020, the lowest in a whole decade. Nevertheless, these flows remain in stark contrast to the gold flows that were seen before the 2008 crisis, where central banks were net sellers of gold. Clearly, central banks misunderstood gold's safe haven characteristics at that time. Indeed, the Western response to the 2008 financial crisis of interest rate repression and quantitative easing prompted the likes of China and Russia to lead a wider trend towards de-dollarization of foreign reserves. This diversification strategy of exchanging dollar assets for gold made perfect sense and has helped to promote confidence and stability in these nations. What's more is that it has led to a wider trend of de-dollarization of foreign exchange reserves among other developing nations. And this has proven enormously important for emerging markets whose currencies frequently come under pressure in foreign exchange markets. But by April last year, as oil revenues fell, Russia stopped buying gold, while China hasn't bought any more gold for a year. But it remains the world's largest producer, of course. And so by Q3 of 2020, central banks actually became net sellers of gold for the first time in 10 years. This was largely led by Turkey, whose currency had come under increasing pressure throughout the year, and Uzbekistan. Yet Turkey remained a positive net purchaser for the year as a whole. But given that central bank earnings on sovereign bonds has been greatly reduced as bond yields are zero or even negative, and the gold price has weakened from the summer highs, I expect central banks to continue to add as net purchasers across 2021. From a more cynical perspective, there is the need for central banks to use gold to lease to the open market and rehypothecate numerous times to suppress prices as well, of course. And then there is the notion, the IMF's call for a monetary reset where the country's gold reserves will be used as crucial poker chips in determining future policy. When the central banking magazine, yes, there really is one, surveyed 26 central banks in September 2020, it found that not one of the respondents found gold to be a less attractive reserve asset, while 23% of respondents saw gold as a more attractive to hold for their central bank. Indeed, a reserve manager from Asia explained, "Gold has been an integral part of our reserves regardless of market conditions, and it may likely continue to be so." A respondent from Central Europe said their central bank remained committed, stating, "We were very positive on gold in terms of the role it plays in any foreign reserve portfolio, even before COVID-19, and that has not changed." Another reserve manager from Europe had seen their view of gold's strength in a crisis confirmed, stating, "Gold is seen as a safe haven asset in times of financial and political stress. Current market conditions have no impact on its strategic role in foreign reserves other than to reaffirm the validity of the initial view." And so 6 respondents said that their central bank's view had changed. The reserve holdings of this group ranged from $3 billion to more than $300 billion, and they were mostly drawn from middle-income countries. In the comments, 2 reserve managers from Africa and Europe respectively noted that an increase in the price of gold had strengthened its safe haven status. And crucially, when asked the question, will global central bank gold reserves change over the next 12 months, a whopping 62% of respondents said that they expect gold reserves to increase, while not one expected a decrease in gold holdings by central banks. As such, despite gold trading at a higher level, it seems we can certainly expect central banks to remain net purchasers of gold over 2021. In fact, many analysts, including Citigroup, expect the figure to increase to around 450 tons on a net basis. So it remains clear that gold continues to be at the heart of our monetary system, and this process will be accelerated as the Basel III regulatory framework continues to be rolled out. Crucially, as of last year, this sees gold, of course, as a Tier 1 asset with a 1-to-1 ratio against cash. Basel III regulations are something we'll consider in a further upcoming video. But these changes are fascinating with the prospect of an upcoming monetary reset. And so I do expect further asset diversification by central banks, and intriguingly, I believe we will this year see our first central bank hold Bitcoin before long. It's already being considered by the mayor of Miami. Interesting times ahead, that's for sure. And so the lesson here is really clear. The central banks want to continue to maintain their own personal gold standard. And what does that tell us? Well, it ultimately tells me that we should also be focusing on maintaining our own personal gold standard. Thanks so much for joining me. Do consider subscribing, and I look forward to seeing you next time. Bye-bye.